police detained more than 100 people after angry protesters rejected Prime Minister George Papandreou's renewed commitment to tough austerity measures.
We made a decision to wage a battle in order to avoid a catastrophe, a catastrophic bankruptcy for the country and its people, to stay in the euro. And this means difficult decisions, difficult sacrifices.
But after nearly 2 years, many Greeks say salary cuts and tax hikes have done little to revive Greece's struggling economy. Hong Kong financial analyst Francis Lun says the inability of Eurozone officials to find a united front is adding to the uncertainty in world markets.
One of the European Central Bank directors resigned last Friday, and that created a shock wave in Europe, meaning that Europe cannot stand as a united front to tackle the Greek sovereign debt crisis. This means Greece will go down the way of orderly default and bankruptcy, and that is the unthinkable.
European shares hit their lowest point in more than 2 years after German economic minister Philipp Ressler, seated next to German Chancellor Angela Merkel, suggested Europe could not rule out the possibility that Greece might not be able to repay its loans. A Greek default is likely to raise interest rates for other debt-heavy countries within the 17-nation Eurozone. It could also pose serious problems for French banks, which hold large amounts of Greek debt. Oliver Roth is a trader at Close Brothers Seidler Bank.
We saw today a weak starting of the markets because of the concerns we have about Greece and increased bankruptcy, and especially the banking sector and the insurance sector have a lot of problems concerning this subject.
Economists say a banking crisis in Europe would hurt prospects for a U.S. recovery, which could trigger another global recession. Fears of a larger crisis sent the euro to a 7-month low against the dollar. Milar Sega, VOA News.